Hi everyone, I hope I'm audible and visible to all of you. Welcome to today's session where we are going to talk about tokenizing private equity on the HYFI blockchain. I'm going to wait till you can confirm that I'm audible and visible to all of you. Could you just drop me a quick message on that? Hi Shrutika, how are you? Awesome. Okay, Chef, so let's start off. Let me just quickly share my screen for a second. Private equity. So you've obviously heard of the word equity shares before. Private equity refers to capital investments that we make in companies that are not publicly traded on a stock exchange. That's the reason for the word private. So, for example, there are so many companies like Apple, Amazon, Microsoft, which are listed on stock exchanges, and thereby it's very easy for somebody to quickly buy and sell those shares. But what happens to startup shares which are not yet listed on a stock exchange? Usually this happens, when they go for, say, venture capital funding or any other such kind of private investments. The shares are not listed on the stock exchange, hence the term private equity. Now, this usually happens for a company which is slightly earlier in its life stage, and it basically helps the company to grow and improve, and finally it could exit by way of listing on the stock exchange. So I would say the most common example of where private equity is used is venture capital funds investing into a startup. Now obviously the question that you may have is, what's the real difference between being listed or not listed? When you are listed on a stock exchange, you go through a regulator. For example, in India, it's the SEBI, or in the US, it is the SEC. They have a lot of legal formalities and due diligence which is required. After that, you get listed on one or more exchanges. Could be NASDAQ, New York Stock Exchange, Bombay Stock Exchange, National Stock Exchange. Once you get listed, it is very easy for people to buy and sell the shares. So you could go through your banking accounts. Like in India, it's very easily linked within your demat account from your bank account. So within seconds, you can buy and sell these shares. But when we talk about non-listed companies, buying and selling the shares is not easy at all, because we have to do a lot of due diligence in every transaction. So imagine you are talking to the founders of that startup. You don't even know how many shares they've issued. You don't know who are the current holders of the shares. You kind of have to trust their word on it. And that is the reason you're going to involve chartered accountants and lawyers in every single transaction, complete a lot of legal formalities, and then do the share transfers. So because it's so easy in publicly listed companies and because it's difficult for private, that's where we now try to connect these two worlds. Now, if a startup lists its shares on a blockchain platform, not on a public stock exchange, on a blockchain platform, then it can combine the best of both worlds. It is not yet listed, so the costs involved in listing, which are quite expensive, don't have to be incurred. All the regulatory compliances are not that hard. And secondly, it's easy for people to buy and sell because the entire cap table is visible to all of them. So at the click of a button, you know who the owners of each and every share are. You can see how the ownership of the shares is changing. And also, very interestingly, it becomes easy for people to quickly buy and sell the shares from anywhere in the world. So, an investor sitting in Greece could very easily buy shares of a company list or a startup from India without needing so many chartered accountants and lawyers to do the due diligence. I hope that part is clear. Give me if there are any questions that you have on what we have discussed so far. So I've explained to you what private equity is and what the real benefits of listing private equity on the blockchain really are. I'll give you guys a minute or so. If you have questions, put them in. Otherwise, I'll continue. Okay. Anyway, as you have your questions, just keep putting them. I just hope I'm clearly visible and audible to all of you. Could you give me a quick yes if you can see and hear me clearly? Okay. Now, the next issue that I want to talk about is, what about the regulatory compliance? Like, is it really allowed by countries, by the regulators, for a non listed company to put its shares on the blockchain? Now, first step, we must understand that at the end of the day, a blockchain is just another technology platform, right? So when we talk about, let's say, WhatsApp, I'm sure all of us use it, but how many of us really know what is the tech running behind it? We don't care. At the end of the day, it's some database technology, some front end they're using. We are interested in using WhatsApp. Similarly, when we talk about blockchain, as an average investor, you don't care how the technology works. So there is no law in the world which tells a company that you can or cannot put your shares details on an Excel sheet or maybe on a Google spreadsheet. Similarly, no country specifically prohibits any startup from putting its shares details on a blockchain technology. Secondly, there are jurisdictions like the state of Wyoming in the US, which specifically have now made laws which allow a startup or a company registered in Wyoming to put its details of all its shares on a blockchain. They've specifically used those words. So, considering both these aspects, there is no real regulatory challenge to it. The only thing that we've got to remember is that you cannot start selling your shares like a stock exchange unless you're actually listed on an exchange. So that is the only place that we need to be careful. So where a peer-to-peer marketplace is okay, where one investor can see what other investors want to sell and then directly get in touch with them and then do a one-to-one deal with them. That's fine. It is when a third party comes in and tries to run an exchange that they could get into legal trouble, because then you need to be a proper registered stock exchange, and that's not something very easy to do. There are lots and lots of legal formalities which are required in that. So broadly, what we can say is, for a startup to raise funding, they naturally need to get across to a larger number of investors. Today, that's not very easy, because as a startup, what are you going to do? So you're going to talk about yourself on your LinkedIn page and other social media platforms. But now that an investor is interested, what do you do next? So much of due diligence is required, and that process can sometimes take from weeks to months. So what I'm trying to suggest is, if a lot of the startups get together, they list or they put out details of all their shares from day one on the blockchain. So that means from the first time that even the first share was issued by the company to its founders, every single equity share is mapped on that blockchain platform. Every time that there is a change in ownership, that is reflected on the platform. After this, if anybody in the world, any investor wants to be a part of the startup, they could run a node on their own laptop very easily. They can see the details of all the shares, and they can then make their offer to existing shareholders directly in a peer to peer fashion. And then they can complete that transaction. They can exchange money through bank transfers, credit cards if they're interested in, or they could do it very easily using cryptocurrencies also. Again, there's no restriction on that. So that's the broad outline that I am suggesting. Any questions? Not yet. Okay. Do keep putting in your questions as and when you have them. I'm just going to presume everything is very clear. Now, there are usually 4 stages, and I'm going to share my screen. Okay, so you can see that there are 4 stages when we talk about tokenizing private equity. So stage one, I hope it's clearly visible to you on all your screens. Stage one is what we call as the verification of the equity. So before we put anything on the chain, naturally we want to verify. So we verify the entity, right? Like, who is this entity, or who is the startup which is actually listing the shares? What are all the legal and registration documents? That's verified, step one. Step two, a digital identity is created of that startup on the blockchain. And all this is immutably recorded. What do we mean by that? Once we put some data on the blockchain, it's provably immutable, which means you cannot really change it unless you have, let's say, your private key, and then you can sell your shares to someone. But the data that's already on the blockchain, nobody can actually tamper or change. And that's the reason we call it immutable. Second stage is where we establish the ownership history. So every single equity share from the time that it was issued till today, how has it actually moved? And then you map that, or you integrate that with a token. So effectively, as a startup, you usually would have one class of shares. So they could be called class A, and then the entire history is available. Now, there are times you may have multiple classes. So, sometimes the founders keep shares which have more voting right. So we usually have a separate class that is created for them. So you could have class A, class B, class C. Each of them would be separate, similar to ERC20 tokens in themselves. Then they are integrated with that token, and again, all this data is recorded on the blockchain. The next step is fractional ownership and issuance. So now the tokens are divided amongst the equity holders, tokens are issued on the platform, and we do all the legal and regulatory compliance, all those regular documents about whether you are filing properly under the country where you're registered. All that data also keeps getting pushed to the blockchain. Finally, in stage 4 is the trading and liquidation, and here we've got to be the most careful. So I recommend the establishment of private equity token marketplaces. So different countries or different regions, people could get together to set up these marketplaces, not exchanges. So these would enable peer-to-peer transactions. So the blockchain is only serving the purpose of being the record of the history, but deals are made outside of that in a peer-to-peer fashion. And then the blockchain can also help in price discovery and liquidity, because every time that shares are changing hands, the details of that are being recorded on the blockchain. So everybody comes to know what the price of that particular share is, and there it becomes easier for people to then decide how much they're ready to bid or pay for it. So price discovery and liquidity becomes a critical factor. And finally, we have the redemption and rights execution. So, in equity shares, from time to time, there could be bonuses given, or we could have rights issues being created, or there are times when there is a buyback. And let's say some one party steps in, buys the entire company out. I mean, let's take a classic example of what happened to Twitter. So, Twitter was a publicly listed company, but then Elon Musk stepped in, bought out all the shares, and made it a private company. So even something like that can then happen and be supported on the chain. Uh, okay, there's an interesting question from Paulo. If one dies, what happens to his tokens? That's a good question. Actually, that's the same kind of thing which could happen is what happens to your equity shares, mutual funds that you own, or virtually any asset, even real estate. Now, when somebody passes away, there are usually two ways in which things move forward. If the person has made a will, depending upon the religion of the person, then the will is executed. Or in some cases where the person has not made a will, in that case, it goes as per the family law of the religion that you are following. So I'm not sure about other countries, but like in India, we have Hindu law, Parsi law, Muslim law, and Christian law. And then under Hindu law, certain other religions come in. So there it is very clearly described how the property has to move. So, for example, even if your property is ancestrally owned, you didn't earn it, ancestors gave it to you, you can't will it away to someone else. There are restrictions on how it passes. So, Paolo, to answer your question, tokens on a blockchain would also be similarly considered assets, like any asset that you own, and then they would go depending upon your will, or they would go depending upon your religious law that is being followed. I hope that answers your question. Do let me know if you guys have more questions. I hope I'm not going too fast, and I hope the topic is not too complex. Now, another benefit that I see when we look towards private equity usually is something that the richer ones, or the more wealthy people usually get into. Common people, middle class people usually don't get it because it's complex. So I think by bringing in the blockchain component, we can make private equity easy enough for investing by normal investors also. Let's say someone has $100 and upwards budget, even they could step in. The way mutual funds have revolutionized stock market investing, I believe the blockchain could revolutionize private equity investing. Paulo has another question. What happens if someone loses their private key? And I think that's a very, very good question. And that is why I will be very honest. I am more in favor of permissioned blockchains with custodial wallets, especially when it comes to real world tokenization. And let me explain. Yes, we've all seen recently that, when you look at FTX, a lot of people lost their money because FTX, being a crypto exchange, controlled all the crypto assets of its investors. And then it turned out to be a huge bubble and fraud, and a lot of people lost their money. But what you've got to understand is there is a difference between cryptocurrencies like Bitcoin, Ethereum, and real world assets. The ownership of a cryptocurrency is completely decided by the private key, nothing else. So whether or not you own a particular Bitcoin amount or Ethereum or Polygon or anything is decided by whether you control the private key corresponding to that address or that wallet in which those coins are held. But real world assets are not like that. It doesn't matter who owns the tokens. At the end of the day, a court of law could step in and look at the legal document to decide who's the actual owner. Because we are talking about real world assets like real estate, whiskey cars, gold, silver. All of these exist in the real world, not only on a blockchain. There are documents available for each of those. When you are owning shares in a company, the company is legally registered in some country. It is regularly filing documents with a regulator. It has a bank account, it has auditors. All of this is in the real world. That is why I strongly believe that when we talk about real world assets, we should not use non-custodial wallets, let's say like a MetaMask. Ideally speaking, we should be using custodial. In that scenario, the entity which is actually having the custody and all the legal documents, they can operate it. And it doesn't matter if you lose your private key, it's now like a password which can always be reset. And in fact, let's take a very simple example on that. What happens if you lose the password to your bank account? Today, when you look around, you see all the wealth around you, right? So whether you look at today your holding of mutual funds, fixed deposits, your bank balances, your house, where is it that if you lose some key you lose everything? No, it's everything is done with proper legal formalities. And if you lose a password, you just reset it, or the bank can reset it for you. So I believe we have to follow the similar approach. And then it doesn't matter whether you lose your private key. Everything should be done in a proper custody based manner with a custodial kind of a wallet. I hope that answers your question, Paulo. Any other questions? So now another thing that I'd like to talk about is that who can benefit from private equity listing. So one could be, of course, startups, and I think they are the most important part because they are the ones who need the money the most, and usually their requirements in the beginning, at least, are quite small. I mean, they don't really need huge amount of funding; they need small amounts of funds, which usually they start by raising from the founder's own money, or it could be friends and family, or then they start to approach third parties. I think by making the startup's equity transparent on day one, even when they're looking at their first raise, which is usually about $100,000, then they could easily bring that into the picture and they could raise it through that. Now, here at HYFI, why we are so interested and bullish on private equity? Because HYFI or the hybrid finance blockchain is a permission chain. So we are legally compliant, we follow all the KYC, AML, and all the other laws. We are permissioned, which means every transaction is legally compliant. If a court of law orders, then assets can be blocked. In fact, we are working on how we can give notes to the courts and regulators so that on their own they can freeze assets. They don't even need us for that. So why we are looking at private equity being one of the most important use cases at HiFi is because we believe there is this trillions of dollars worth of opportunity, which today is not easy to do because of no transparency in private equity. So I, in fact, want to call if any of you listening to me are actually startup founders or you have a startup in mind, and especially I would say one of the best areas are SaaS startups, software as a service, because as an investor, it's very easy for me to understand what a SaaS startup is doing and how much money it's actually making. I can just log into the dashboard that you give me and I can see in real time how many users there are and what they're doing. And I can gauge your revenue streams. So I want to call upon all the SaaS startups that if you want to try to raise funds through the blockchain method, and I'm not saying it has to be through crypto. You don't have to raise it through Bitcoin or USDT if you don't want to. You are using blockchain as the method, not necessarily cryptocurrencies. You could still take the money directly into your bank account. But we're very keen on working with you. So, especially if you're a SaaS startup, definitely do get in touch with us. Even if you're non-SaaS and maybe even in manufacturing sector, do get in touch with us. It's a little more complex, but it's definitely doable. And I think what it would really help is to build this one single marketplace where anybody in the world could come and see what are the most innovative startups that are there. And for small amounts of money, people around the world could then become your partners in growth. They could become your shareholders. So many of them could become your business partners also. So I want to call upon all of you guys, and I really look forward to working with startups, especially SaaS startups around the world, on getting them onto the HYFI blockchain. Let me know if there are any other questions you have. If there are no other questions, I'll wait for a minute or two before disconnecting. So I hope what we've discussed today is clear to all of you. To summarize, private equity is equity of a company which is not listed on a public stock exchange. Because of legal issues, private equity is a lower liquidity market. It's not very easy to buy and sell shares in that scenario. And that's where the blockchain technology can come in, especially laws of countries like Wyoming in the US. And HiFi blockchain is very eager to work with startups, especially those who are in the very early stages of fundraising. So if you're looking at raising funds up to $100,000, that's usually your first. So sometimes it's also called seed funding, call it angel funding. Especially if you're at that stage, we definitely want to work with you. So do get in touch with me or Sheena Arora on LinkedIn, and we'll definitely love to be a part of your fundraising and startup journey. And I'll wait for a few seconds. If there are no other questions, then I'll disconnect for the day. And to make sure you get notifications of all our sessions, I'm sharing the HiFi WhatsApp group so you can easily be a part of that. So all details are always available to you. I can see a question from Paulo. Can tokens be traded privately or they must be traded on a specific platform? That's a very good question, Paulo. So it would depend, right? So there are no technical or legal restrictions. One option is we can choose to do this, say, on a public blockchain or a permissionless blockchain like Polygon, for example. And in that case, because it's an EVM compatible wallet blockchain, we could have the shares created like ERC20 or BEP20 tokens, and then investors could use wallets like MetaMask. That's option one. Option two is you could use private and permissioned blockchains like HiFi. In that case, you would use the HiFi marketplace and you would use the custodial wallet. So like I said, both options are available. Hope that is clear. Do let me know if you have other questions on this. So I would say the design of the token comes second. The step one is we need to analyze and understand the particular startup that we're looking at. How is it as a business, right? At the end of the day, it doesn't matter whether it's private equity or not. The business has to be viable. So if it's a startup, is it innovative enough? Does it have a large enough potential for growth? How ready is the product? So I'm obviously very keen on startups which have at least got an MVP or a minimum viable product, because a proof of concept may not be enough, because at the end of the day, be fair to the investor, when it's only a proof of concept, the investor has to take a much larger risk. What if the product isn't even built on time? But when there's an MVP, the investor knows that at least the basic product is ready, so version 1 has shipped, people are able to use that platform. So it's obviously better from everyone's perspective. So that is why I would say MVP stage of a viable business is the basic criteria that we would look at. Then of course things like which country the business in, because due to certain laws, certain countries may not, investors may not be able to buy into shares of certain countries. Like for example, there's something called the FATF, which is the Financial Action Task Force, and that says there are certain countries which are in the blacklist. Now, in that scenario, people may not want to invest in startups of those few countries. So these are again then some of the small issues that need to be taken into account. Once that's clear, then the startup could issue a simple white paper, or even their website would be enough if it's a SaaS business, for example, and then the whole investing process can begin. And as you know, we keep regularly talking about HiFi. HiFi is token itself is going to list on 4th of July 2024. And if any of you are interested in being part of the HiFi community also and buying HiFi tokens, do get in touch with us and we'll explain to you how that can be done. Thank you so much, Paulo. I'm glad you found the explanations clear and simple. So now, as a next step, what I want all of you to do is share this video with your friends, and whoever is running startups at the early stage, looking at up to 100K in terms of fundraise, and preferably in the SaaS world, do get in touch with me or Shinam Arora on LinkedIn. I've also shared the WhatsApp group address, so you can join that, and it's easy to then get in touch with me using WhatsApp also. I'll again wait for a little while. If there are more questions, put them in. Otherwise, I'll see you next Friday. Okay, I think we'll take a break. And it was great speaking to all of you. I'll see you guys next week. Bye bye.